If you want to know exactly where to buy the dip on Bitcoin, I suggest you stick around because today I'm going to tell you exactly where to buy the dip on Bitcoin, exactly where we're going to bottom, and exactly when we are going to 100K. So without further ado, hit that like button. Comment below if you think I'm crazy for saying this, and let's get right into it. So first and foremost, I am crazy for saying that because that intro was a little bit of clickbait because I have no idea what Bitcoin is going to do. But I do have some special tools in the tool chest, and those are my ability to look at the past and understand exactly what the entire neural network of traders out there, retail, hedge funds, institutions, Michael Saylor, when we look back at these charts, we're not just drawing squiggly lines and trying to predict the future. What we are looking at is how the entire neural network of traders reacted under every situation and every condition. So when you think, oh man, we can't compete with institutions, hedge funds, we can literally look and see exactly how they reacted and traded every situation. So when we see how they reacted in the past and traded in the past, we can look to the current and present time, look for similar situations, and that allows us to look for the higher probability of how they might react again in today's situation. So that's what we're going to be looking at today is how exactly did the entire neural network of traders react under certain situations in the past bull run, and then apply that to today's current bull run and look and see how that might happen again and how we can react ourselves with our own money to hopefully turn out a profit. But as with every trade, there's always either a win or a loss. So we have to prepare for both situations and always protect ourselves if we are wrong. So without further ado, let's get right into what's going on here on Bitcoin. So first, let's take a look at the past price action for Bitcoin. Back in late 2019, early 2020, we saw what I call a revival breakout, which triggered at about 12,800. On that breakout, we saw basically not a big move, about 51% from the breakout point. And I call this velocity. How big is the velocity into resistance? Well, this was only a 51% move. Not that intense, right? So at that current time, we then raced right up to that level. And then in fact, we didn't just bust right through it. We actually came back down. I think this was about 14%. Let's see what the pullback here was. We had about a 16% pullback right off that high. And then we proceeded to form up a bullish breakout pattern, okay, that we can see by this triangle flag breakout pattern that was then giving us a lot more anticipation and prep time to buy this actual breakout that then led to huge profits in my portfolio. This is when I turned 20K into 1.7 million, basically just on this run right here, okay? And so when that broke out of above the all-time high at about 19.5, 20K, I was pretty confident in buying here. The US stock market wasn't in some crazy situation of this looming debt crisis. Well, the debt crisis was building, but it wasn't as bad as it was right now. This was almost 4 years ago at this point. And so buying in there, I had a lot of confidence. The stars were much more aligned back then than they are currently right now. After we broke out above all-time highs, we saw 3 major pullbacks in Bitcoin right to the 50-day moving average. And we could look and see this pullback from the top down to the 50-day moving average was about 30%. This pullback from the top down to about the 50-day moving average was about 26%. Then this pullback from the top was about 18%. And then we saw one final run at all-time highs, pull back to the 50-day moving average about 13% before finally just cracking through it. So that being said, we can now look to the future and say, okay, price typically in the last bull run ran back to the 50-day moving average before making the next leg up between 18 to 30%. Okay, so we can then now look and see into the future and expect that this might happen again because this is how the entire neural network of traders reacted in the past. This is how institutions react in the past. This is when big money started buying in the dip at the 50-day moving average. So now we can use that insight to potentially trade and have plans ahead for the current price action. So let's take a look at what's going on the current price action for Bitcoin. We saw the same exact pattern that broke out that led to the big run up, the revival breakout pattern, which is basically just a flat top triangle after forming up an ascending trend after the major lead-in trend is bearish, right? Same exact pattern here. Lead-in trend is bearish, flat top triangle breakout. We call that a revival, and that triggered the initial bull run. We're now seeing the same exact pattern here that triggered at about 30K But the difference is this, guys. The velocity of this move was much, much greater, which makes it much scarier to buy the all-time high breakout. The velocity of this was 123%, even spiked to 139% from that breakout in a very short amount of time. Okay, so that was a big move. The velocity on the past move, right, again, from the revival to all-time highs, was only 50%. And it didn't even break out. It didn't have enough velocity to just bust through it. It actually formed a bullish flag pattern underneath all-time high, which then led to the higher probability of a breakout extending this and thrusting it through. And that's why we saw this big move. When we look at the current price action now, we saw the revival and then just break hugely right through. No halt in bullish flag pattern underneath that resistance, which would then give more confidence for the breakout to the upside. It is slammed right through it at 139% velocity. That is huge. That's going to be a much higher probability of what we call a bull trap, which is a fake out to the upside above resistance, and then a trap. A bunch of people buy in long here and then get stopped out on the way down, and we see the big push to the downside. So I had zero confidence to buy into this breakout. Unfortunately, I actually missed a lot of this move. I made 120K on this move right here. Then I got dengue fever right here. I was basically bedridden and non-functioning for the next 2 weeks. And then now at this point, I was going to buy in here. And I've just been waiting patiently for a potential dip on Bitcoin. Now, if we look at the current dip that's happening right now, which was likely or rightfully so after 139% rip straight through resistance, we saw one little dip. Huge volatile day of just this dip right down to the degenerate trend, and this is slapping right back up into this. Now, currently, the 50-day moving average is at about 56,000. So we can expect that price is probably going to come back down to at least this level before we see the next leg up on Bitcoin. So you have to be preparing for the potential move all the way back down in this level. And that doesn't mean that is going to bounce here. But when you look at the past price action, we saw it happen 1, 2, 3, then almost 4 times right here before finally breaking down, retesting, and then slapping 50%. Ripped back up, trapped everyone here again, which was actually the same pattern as this, and then a 77% drop to the downside right there. Okay, so the most safest and highest probability dip buying opportunity based on how the entire neural network of traders reacted in the past is right around 56,000 currently. Obviously, every day that goes by, the 50-day moving average is going up slightly as price still holds above the 50-day moving average. But as of right now, it is Wednesday, March 20th. As of recording this, it'll probably be however many days later when we finally post this. It's at about 56,128, which is, from current price action, an additional 5,700 point downside on Bitcoin. Now, 2 things are going to happen from there, right? Is one, we can buy this dip right here on Bitcoin, as well as pick up altcoins, of which I have been picking up some altcoins on the way down, and then expect that the bull run is going to continue. We then reform a new pattern, which will be a force pattern, right? The force pattern is essentially this, a very, very bullish pattern that I love to trade. It's an ascending trend that goes like this, huge first initial spike on heavy volume. And then we come back down and then form a triangle pattern and break to the upside to all-time highs. That is a huge pattern that I love to trade. Similar to kind of what happened here on the all-time high breakout last time. But this time, right, it just ran straight into resistance and this blew right over it. The velocity was too high. So now the pullback will then create what is better and more looking like the 2020 breakout. If we pull back to the 50-day moving average, then retest this level, now that's going to be a much better flat top breakout triangle pattern to then rip to the upside and give me much more confidence to be buying the secondary push into this level. But that doesn't mean that's going to happen. What if this is just a double top, we come back down to 50 and it just crack all the way to the downside and then come all the way back down to retest the longer term ascending trend of this larger triangle breakout pattern? This is very possible, and we cannot rule out that that could potentially happen. So right now, what am I currently doing? I'm going to trade this. I'm going to play this dip onto the 50-day moving average if we even get down there, but I think that's a higher probability setup to potentially buy the dip for the extended move to the upside and then a run to 100K if this actually breaks out. The problem in this situation here, guys, is that U.S. stock market is extremely overextended, right? And if the US stock market finally gets some sort of dip in the middle of all this stuff happening for Bitcoin, that's not going to be a good situation for the crypto market as a whole. as of right now, the S&P 500 is currently trending extremely strong along what I call the degenerate trend, which is my own custom indicators. You can get it at degenerate.io. But this is an extremely strong trend. But if this trend breaks, of which it definitely could at any time, that's going to be a big problem for Bitcoin's ability to sustain itself and actually break out of all-time high and run to 100K, because we have never had a crypto bull without a stock bull, okay? There's obviously a huge debt crisis looming. Jamie Dimon, CEO of JP Morgan Chase, just started locking in profits and selling his shares of JP Morgan for the first time ever. So he obviously is thinking that markets are overextended, but obviously maybe he's just taking profits. He didn't sell his whole bag, obviously, but he's starting for the first time ever at all-time highs, starting to lock in gains, okay? So that is something to note. NASDAQ is also potentially starting to break down. Now, if it breaks out above this actual descending trend line, that could be another push to the upside, maybe even to the whole number of 20K. That would be very, very good for Bitcoin's run. But if we start breaking down below this level, about 17.8, as well as break the 50-day moving average on NASDAQ, that's going to be a problem. And we also have to factor in NVIDIA. NVIDIA has just gone fucking fuck you bonkers parabolic, of which there's no situation where this doesn't crash, okay? Now, it doesn't mean that it has to crash right now. Who knows? Maybe it goes to 1,000 or 1,500 or 2,000, which would obviously be great for all the AI coins in Bitcoin. But every parabolic run on any asset ever, which is in a bubble, crashes 100% of the time. And if this crashes, obviously that's going to affect all the AI coins in crypto. It's going to affect Bitcoin and just crypto as a whole, because NVIDIA crashing is going to cause the NASDAQ to crash, right? NASDAQ and the S&P 500, I think the NASDAQ, the entire 80% of it is ruled by the top 10 stocks, okay? So this isn't a stock bull run. It's a top 10, top 15, 20 stocks that are holding up the entire market, one of being which is NVIDIA. And if this run on NVIDIA ends, that's going to be detrimental for the US stock market's overall trend, as well as crypto as a whole, right? Because NVIDIA is leading this whole charge for all the AI coins pumping in crypto in general. So that's the current situation, guys. The most high probability and safest bet to buy the dip on Bitcoin is when we come back down to about 56,000, currently the 50-day moving average. That's where I'll be looking to buy the dip on Bitcoin, potentially even buying the dip on Ethereum, which is now at the 50-day moving average at about 3,100. But anyways, guys, that's the current situation on Bitcoin. We're not just drawing a bunch of squiggly lines here. We're looking at exactly how big money reacted in the past. There's no such thing as the market being manipulated. Obviously, they have big money to throw around and outsmart you, but it's not like we can't see exactly how they did it in the past. That's what technical analysis is seeing exactly how the entire network of traders reacted under every situation. It's literally a painting of human psychology. So we have to use that to forecast what might happen again in the future. Obviously, we can't predict things. All trading is setting up probabilities and managing the risk along the way. Anyways, guys, that's a wrap for today. Stay tuned, like, comment, subscribe, and I will see you in the next one.